Welcome back to our channel, for smarts, for learning smart things for smart people with easy explanation. Please support channel by like and subscribe. Thank you. Let's start. U.S. government-issued bonds, known as Treasury bonds, have a long history of providing investors with diversification, safety, and income benefits. Despite recent losses in 2022 due to interest rate hikes, Treasury bonds remain a secure investment option. In this blog post, we will explore the advantages of Treasury bonds, their role in diversification during economic downturns, and highlight 7 top Treasury bond exchange-traded funds, ETFs, to consider in 2023. Number 1. The safety and benefits of Treasury bonds. Treasury bonds are considered one of the safest securities available due to the backing of the U.S. Treasury Department, providing low default risk. Unlike corporate bonds, Treasuries are guaranteed by the U.S. government, offering a much higher credit rating and lower risk of default. This assurance gives Treasury bond investors confidence that their interest payments will be received on time and their principal investment will be returned upon maturity. Number 2. Diversification in the flight to quality. During the 2008 Great Recession, Treasury bonds demonstrated their diversification power as investors sought refuge in government debt. The ICE U.S. Treasury 20-plus year Treasury Index returned 33.8% while the S&P 500 fell by 37%. This historical example showcases the role of Treasury bonds as a safe haven during economic downturns. In times of economic recession or bank failures, Treasury bonds can act as a flight-to-quality asset, providing stability and mitigating risk. Number 3. Accessing Treasury bonds. Investors have multiple options to access Treasury bonds. They can purchase individual Treasury bond issues via Treasury Direct or through a broker. Constructing a Treasury bond ladder, which involves purchasing bonds with staggered maturities, provides greater diversification and helps manage interest rate risk. Alternatively, investors can opt for Treasury Bond ETFs, which offer liquidity, diversification, and lower transaction costs. Number 4. Key metrics to consider. Before investing in a Treasury Bond ETF, it's essential to understand key metrics. Yield to maturity measures the expected return assuming all bonds are held until maturity. Duration, on the other hand, assesses the sensitivity of the ETF's price to changes in interest rates. By considering these metrics, investors can evaluate the potential returns and risks associated with a Treasury Bond ETF. Top Treasury Bond ETFs for 2023. Number 1. iShares iBonds December 2024 Term Treasury ETF, IBTE. IBTE is a defined maturity Treasury bond ETF that holds U.S. Treasury bonds maturing between January 1, 2024, and December 15, 2024. It provides monthly distributions, offering a convenient and efficient way to implement a laddered bond strategy. The ETF's holdings are structured to liquidate and pay out its net asset value to investors once 2025 rolls around. Number 2. Vanguard Short-Term Treasury ETF, VGSH. VGSH is part of Vanguard's Treasury Bond ETFs and provides consistent monthly distributions. With a shorter maturity, VGSH pays higher yields due to the current inverted yield curve. It has an average duration of 1.9 years, meaning that if interest rates rose by 1 percentage point, VGSH would fall by 1.9%, all else being equal. The ETF charges a low expense ratio of 0.04%. Number 3. iShares U.S. Treasury Bond ETF, GOVT. GOVT is a broadly diversified Treasury Bond ETF that tracks the IDC U.S. Treasury Core Index. It holds a ladder of treasuries ranging from 1 to 30 years in maturity. GOVT's portfolio of bonds averages out to a yield to maturity of 4.1% and a duration of 6.2 years. This ETF is popular among passive buy and hold investors due to its low expense ratio of 0.05%. Number 4. iShares 25-plus year Treasury Strips Bond ETF, GOVZ. GOVZ invests in separate trading of registered interest and principal of securities, strips, which are Treasury bonds that have their coupon payments removed. These bonds are very sensitive to interest rate movements. Currently, GOVZ sports an average duration of 26.8 years, making it suitable for investors speculating on falling interest rates. Number 5. Vanguard Short-Term Inflation Protected Securities ETF, VTIP. Inflation can erode the value of fixed income investments. To mitigate this risk, investors can consider Treasury Inflation Protected Securities, TIPS. VTIP provides exposure to short-term TIPS with an average duration of 2.6 years. In the event of a sudden spike in inflation, the principal value of TIPS adjusts upwards, which also increases their coupon payments. VTIP pays a yield to maturity of 3.8% and charges a low expense ratio of 0.04%. Number 6. The U.S. Treasury 3-month bill ETF, TBIL. Treasuries from the shortest end of the yield curve are known as Treasury bills or T-bills. TBIL is one of the few single bond ETFs on the market, holding the latest issued 3-month T-bill at any given time. Whenever a new 3-month T-bill is issued, TBIL automatically rolls over to it. This mechanic saves investors the need to continually repurchase and reinvest in individual T-bills, while also offering great liquidity and monthly distributions. TBIL charges a 0.15% expense ratio, and the 3-month T-bill yields 5.5%. Number 7. SPDR Bloomberg 1 to 3-month T-bill ETF, BIL. BIL holds a portfolio of T-bills ranging in maturity from 1 month to less than 3 months. It offers exposure to short-term yields, making it an attractive option for cash parking and near-term investment objectives. The ETF currently features an average duration of 0.1 years and a yield to maturity of 5.5%. It also makes monthly distributions, providing investors with regular income. Investing in U.S. Treasury Bond ETFs provides investors with diversification, safety, and income benefits. Treasury bonds have historically served as a flight to quality asset during economic recessions. By considering the recommended Treasury Bond ETFs mentioned in this blog post, investors can access the Treasury market while enjoying liquidity, diversification, and potential income. Understanding key metrics and evaluating the specific features of each ETF will help investors make informed decisions aligned with their investment objectives. Thank you for watching my video. Please help the channel and support us by like and subscribe. See you soon with more smart videos for smarts.